This morning, we took gold sells live during New York session, all while other traders were getting faked out thinking that gold was going to push up. We knew it was going to push down. And it even helped traders like Dan G here profit over $500 on gold. As you can see right here, that was his trade during New York session. My goal in this video is to show you the exact framework that I use to determine a real move from a fake one. So hopefully you too can avoid getting trapped and have the confidence to wait for the high probability trade. To do that, I'm gonna show you the fundamental news story that everybody was getting wrong. Then I'll show you the live chart and pinpoint the fake out, as well as show you the exact moment when we entered our sells on gold. And as a little bonus, I actually ended up changing my bias and taking buys on gold afterward, but we had a headline that gave me a reason to look for that trade. So after we break down the sells on gold that I took live, I'm gonna break down the buys that I had taken afterwards. Now the markets have been giving us a lot of back and forth. We take a look over at gold, we have some pretty aggressive downside. We also have some pretty aggressive upside. We can do this all day in both directions. Sometimes the buys play out, sometimes the sells play out. And I mean, you can do this with NASDAQ, you can do this with US 30, whatever you want to do. We're getting a lot of different things happening in the markets. And the reason being is that we have things like these trade war negotiations with China still happening. We have the Israel-Iran tensions. We have the US getting involved in this. And we still have President Trump doing a lot of other things that's just causing turmoil or uncertainty in the market. So because of that, this makes it really important to want to stay up to date on the news, because my bias on gold or NAS can shift. I could be looking for buys one day, I could be looking for sells the next day. And today's gonna be a perfect example of that when we break this down. Now, going into New York session, if you were to break down the technical analysis on gold, which to be clear, I do not trade just technicals, I use technicals. Obviously, I wanna use my support and resistance for my zones, my entries and all this stuff. Now, if you look at gold, if you were trading just technicals, you'd probably be looking at this as a potential shift of structure, right? You start forming higher highs, lower highs, and then you're consolidating. Technically, this would be a good area for buys if you're looking at that shift of market structure. But because I don't really have any reasons to be looking for buys, as long as gold continues to push up, depending on how far it pushes up and why it's pushing up, I'm not taking buys. I'm just looking for it to hit any of these zones, and I want to take it back to the downside. Having that fundamental bias is important, because when you can do that, you can avoid noise. If you see something pushing in the direction that's against what you believe it would be going in, then it's easier to ignore that trade and just not take it. Some of the reasons that I was bearish on gold, at least looking for sells on gold right now, was because just over this past weekend, we were seeing a lot of potential turmoil or fear in the markets because the US had bombed nuclear facilities in Iran. Now, the past 2 days, we've been seeing Germany come out and other countries coming out and actually applauding what the US has done. We're seeing other people coming out and they're like, you know what? We don't want them to have nuclear weapons. So they're actually backing what he's doing. Just today, while we were trading, NATO came out and specifically said that they applaud and respect what Trump did. Now, I see all of these things as the removal of market fear. If there's market fear, I want to look for gold to push up. But if I'm looking for the removal of market fear, I want to take gold to the downside. I want to look for sells. It's just, for me, a matter of identifying the right time to take it. Because if I do switch my bias, and let's say I do start looking for gold buys, and I start taking something here or breaking here, whatever it is, the only way, at least that I would be comfortable doing it, is having reasons for that switch in the bias, which once again, I'm going to break that down at the end of the video after we break down these sells. So let's play out gold for a little bit here. This is about 6 a.m. Eastern time. We'll go over to the start of New York session, give you guys an idea of what gold was doing when the markets opened. Let's fast forward this a little bit, 8 o'clock. So the markets opened about here. You can see in the bottom, it says 8 a.m. Eastern time. For me, that's New York open. And we have currently, gold is just consolidating. Now, once again, if we're looking at just technicals, we've kind of already started to break that bearish market structure. You're getting those higher highs and those higher lows, but I care a little bit less about the trend. I care more about my fundamental bias. And then I'm using support and resistance to take my trades in that direction. So when we play gold out a little bit more, we actually ended up getting pretty nice hold of support here. Nice bullish engulfing candle right at the market open. So there's decent volume here. And once again, for me, I can see the volume. I'm still not taking these buys. It still pushes up. This next candle, when it hit this resistance, there was a lot of volume. It almost looked like it was going to break impulsively too. And I was telling everyone during the live call, I'm like, look, if you take this, just understand it's risky. You see the volume. It looks like it's going to break. It's already showing a little bit of, bullish momentum. If gold breaks this zone, I'm just going to wait to see if it's a fake out and I'm going to take sells. And for me, that's specifically what I was looking for, because I couldn't justify taking gold buys, regardless of what price action was doing. And honestly, having that patience and that discipline and understanding that the markets can still move without me, but if I continue to follow my bias, I'm going to win more than I lose. Because if I just see volume or a move and I take the trade because it looks like I'm gonna miss money if I don't do it, the more I do that, the more I'm gonna lose. But the more discipline I choose to have in following my strategy and understanding when to and when not to take a trade, sometimes that means I might miss a trade, but most times it means I win the majority of my trades. And that's what I really care about, because you are going to leave money on the table if you follow a strategy and you stick to your plan. It's the nature of the beast. You're not gonna catch every single move for its entirety every single time. So stick to your plan with a strategy that works. Going back over to the chart right here. Now this happened at the next 30-minute candle. I believe it would be this one. Yep, this was too fast for me. When I was on the live call with Day Trading University, I wanted to take sells here. I was looking for sells here. The volume came in, but I'm watching it and it almost came right to support. I'm like, you know what? I'm not entering sells at a support where I don't really have reasons, because if I just get stuck in consolidation, I'm just eating unnecessary drawdown. I want to see a breakout. And this, what isn't a breakout, this would have been a high risk entry, but I still like this zone. Now, the fact that it pushed too fast, I missed this entry, but that was the first one that I was looking at. Some traders on the live call still took it. For me, the risk to reward just wasn't there. So I was like, you know what, I'm gonna be patient. I will find another opportunity for another entry. And thankfully, the patience paid off. Now, first, this happened, and I was like, oh man, I'm gonna miss it. This is melting. This is one of those moments where it's like, I called the trade and I missed it. It happens. Playing this out a little more though, right to the new hourly candle, which I'm pretty sure I did a breakdown of gold yesterday that I posted. It was the exact same time I took a trade too, right at the hourly candle after New York open. It's something I look for all the time. If we have time, we'll put the recording of the actual trade here, but I entered right here. I'm gonna take a stab at this. I'm gonna have tight stops on this though, because it's very impulsive. It's still the new hourly, it's what I was waiting for, but I'm not gonna, if it comes back in this zone and recovers, like breaks back above here, I'm getting out and I'm gonna wait for the stock exchange to open. Like literally as it was breaking, TP was down here, but I ended up going break even. This 5 minute, okay, I'm gonna go break even on this. We're getting good volume. If this comes back up now, it's 20 pips away at a candle closure. If it recovers that, I wasn't meant to be in this trade. And my entry was here. Play this out, that one. This wick is what got my stop loss. And then gold still went down to the TP area. I probably would have closed somewhere around here anyways. I had a runner and it took me a break even here. So this was the trade. These were the sells that I had taken live. So let's play out gold really quick and just see what it did. You can see where my entry was, but let's play this out just for a little bit, because we can see this is a pretty aggressive move in both directions. Like I said in the beginning of this video, you can be looking for sells on gold 1 hour and then buys on gold the next hour. And you can have good fundamental backing reasons for it, not just a random technical breakout or a fake out or a liquidity grab or whatever it is that these people are teaching that, in my experience, isn't actually creating any consistency in the markets. So anyways, if we take a look over at this here, look at the time here, 10 o'clock a.m. Eastern. So what could have happened that would have done that to gold that would make it spike? I'll show you on my news terminal here on the economic calendar. We'll go over to central bank and political events. 10 o'clock a.m. Eastern, we can see that we had the Federal Reserve Chair, Jerome Powell, deliver semi-annual monetary policy testimony. So he's speaking live. That's the only reason the markets did that. And if you have any experience with paying attention to when political speakers come out or Federal Reserve speakers or central bank speakers, it's very common for the markets to do something like this and then do nothing else, which is pretty much what it did. But why did I take buys here on gold? If we look at the time, around 10:20, 10:25 a.m. Eastern time is when I took that trade. So I'll show you inside the Discord here. I was getting, number one, look at the time here, 10:14, Trump. Conflict between Israel and Iran could start again, perhaps soon. Okay, so number one, we're seeing some headlines coming from Trump about geopolitical tensions escalating. Last we knew that they're in a ceasefire deal, so they're not doing anything. And now he's saying the conflict is going to start again. And then he says, not giving up on pressure campaign against Iran. So these headlines are giving me a bias to start looking for some upside on gold. I just need to wait to see if gold actually pushes up, because that tells me the markets are going to react to that. And if this is helpful, this analysis, all of this stuff, like I said, I do this live every day, even when I'm not trading live. We're inside the Discord, we're inside our community. These headlines right here that you can see that I'm posting, I'm doing it all day because I'm in the office actually trading too. If it sounds like something that you'd want to be a part of, you can try our free trial. We'll put it in the description below. And if we take a look over at the analysis here, or the headlines, the second thing right here around 10:25, 10:30, Fed's Powell, the fiscal policy can add to inflation, but I don't comment. So now we have Powell talking about inflation being higher than expected, tariffs causing inflation, and we have Trump talking about geopolitical tensions. Right at the same time, 10:25 to the 10:30 candle, we have this strong closure here, and gold just continues to the upside. Now, it's not that aggressive. To be fair, I still think the safest trade was these sells here on gold, but the sells and the buys both played out for me pretty nicely. But it was just understanding how these headlines could impact the markets, not taking the trade just because the headline's there. I'm taking the trade after the headline actually impacts the market. So if I see something and I'm like, this headline should do this to gold, I'm not gonna just take the trade on gold before I see gold actually moving in that direction. If I think something's gonna happen that pushes gold up, but gold drops, doesn't make any sense to start buying it. So number one, it's staying on top of the markets, right? You have to know the current context of the war in order to know if a headline is new to the markets or not, right? Paying attention to it, understanding when the headline does come out, what is it gonna do to the asset that you trade? For example, if you think a headline's gonna make gold drop, you wanna make sure that gold's dropping before you take those sells. Make sure the markets are reacting to the data or the headline or the news.